As of right now, coronavirus is making the stock markets tank, and I've kind of learned from you that everything is nonsense and nothing is real. Money isn't real, stock markets aren't real, all that kind of stuff. Can you give everyone a quick Cole's notes as to why stock markets are tanking and what the recession means for everybody?
Well, as far as any risk of recession goes, it's always there. In our situation today, since 2008, you could argue that structurally we've never really gotten past the crisis in 2008, right? The whole financial crisis.
Because we didn't really hold them accountable like other countries did, right?
Right, we could have done the Iceland strategy where you maybe jail a couple of bankers and then bail people out. Yeah, that would have been a way. And look, they still have a functioning country over there with great social systems and everything. So we could have done that. Instead, we opted to kind of paper over the crisis. We did what the Federal Reserve calls quantitative easing. So in terms of like our structural problems, you can kind of see that people remain with significant levels of private debt, which is a huge drag on the economy, especially in the United States. You can see that in China, the effects of they would call it like an overheating economy. But when you basically are trying to maintain 6 to 8 to 10% growth per year, you're probably going to wind up with some type of correction at some point. So in 2008, China was basically saying, okay, you know what? The global markets are crashing. We're going to use this opportunity to start importing and start doing new infrastructure. We're going to build thousands of miles of railroad. We're going to build thousands of complexes for people to live in. So they did this. They took that time to do.
Sorry, that's typical of most governments, right? To do a lot of spending in times of a recession or if your economy is basically turning downwards, right?
Yeah, that's pretty the standard Keynesian formula. That if the economy's in a downturn, you start spending to get out of it. Compare with the idiocy of austerity, which is when your economy's doing poor, you keep cutting. Which only makes it harder and harder to get out of the hole. So in our situation right now, you have coronavirus as just the most recent kind of newsworthy story that actually has had a significant impact internally, at least in China, because you're talking about quarantining possibly over 100 million people. This actually will affect a domestic economy. And now China was already in a position, although it's hard to tell for sure because data is actually hard to come by and it's hard to verify it, but it was theorized that China might have been on the verge of stagflation before the coronavirus, but then they got hit. Actually, their whole pork industry was hit with a virus too. It was like some type of swine flu, but it killed off like a ton of their livestock, their pig livestock, which is very important in like Chinese cuisine. And so anyway, you had a huge drop off in those prices. And then you had this whole coronavirus happen. So there's less people going to markets. Whole entire business sectors have been shut down. Like imagine you go to a mall instead of like, in America, it's like an abandoned mall, but in China, like it's not because nobody wants to go shop. It's because it's by decree and through public health concerns that we ought to, stop gatherings from happening. But what ends up happening is that you have food rotting in stalls or you have food rotting in the fields because no one's going to harvest it to pick it up because there's nowhere to sell it. And what you're going to end up happening is over a long period of time, you could get deflation, right? You could get a decrease in production. And if the money supply remains constant or increases, which it might be because China is in an expansionary credit cycle, you could have inflation and deflation at the same time, right? So China is in a precarious position, macro speaking. And then the rest of the world is going to have a problem too. So there are global supply chains that are going to be affected by this. As we all know, a lot of our electronics are made in either China or Taiwan or in East Asia, and then they're shipped over here. But depending on how bad this coronavirus, if it does turn into a pandemic, it could be worse. Yeah. So this is exactly the kind of thing. I guess they would call it a black swan, although, I mean, humans have been dealing with viruses and plagues and all this for thousands of years, but somehow,
I'd say it's more similar to like the influenza outbreak that especially because the mortality rate I think is pretty similar. It was 2% back then, and now we're looking at between 2 and 4%. But one thing I did want to bring up, though, is when it comes to China, the global economy, and the markets in relation to the coronavirus, we've been saying for a while that there's probably going to be a recession of some kind. It's been looming, right? It's been looming since about 2008, because like you said, we didn't do any course correction. We didn't hold any of the companies accountable. And all the predatory practices that were in place that were happening back then are still happening today, right?
Absolutely.
So The other thing, okay, so I guess I'm sorry, I'm going to front load this with like 12 questions. One,
Yeah, sure.
why haven't we experienced that recession yet? Because it was due, right? Two, are we? Is this the trigger? Is this going to start that recession right now? Especially with what we're seeing as the largest, I think, single dip in Dow Jones history that just occurred today.
So absolute anything can trigger this, like anything. An election somewhere, environmental disaster, of course, right? So to the reason why we haven't felt these effects um, more severely, or the reason why we haven't actually experienced another recession more recently, is because the Federal Reserve engaged in a type of economic policy called quantitative easing, which is it's a very intricate word that just means you're going to essentially continue to support the financial sector through monetary policy. What they did was they would buy mortgage-backed securities mostly, but assets from banks, especially ones that were bad or maybe a little bit toxic. So we would call that non-performing or underperforming. Imagine you had a mortgage but you weren't paying it, right? So to the bank, that's bad news. So the Federal Reserve is going to buy those. Indeed, actually, in 2008, they did these series of transactions called the Maiden Lane transactions, which basically they took J.P. Morgan, Wells Fargo, they took all the banks, and they took all their terrible assets, their zombie assets, and they just put them all under one shell company. Okay, it's called a bad bank structure. So imagine, like in your own personal life, if the government said, "Okay, Lance, we're going to take all of your debt and we're going to give it to a fake person, a mannequin."
Thank you so much.
Yeah, you get to keep all your equity and your assets.
Nice.
The fake Lance will take all the debts.
Nice. Fuck that guy.
Right? So that's essentially what happened. Now, part of the reason why there's been a renewed calls of predictions of recessions is because the Federal Reserve is engaged in a really stupid game. So they did the quantitative easing, so they increased their asset sheets to about $4 trillion compared to like the $800 billion before. So it's a huge. I mean, we're talking about like 500% increase. At the same time, they've been lowering interest rates. Okay,
but wasn't that intentionally in order to help Trump during the election cycle? Like this is kind of like jumpstarting the economy, or sorry, like it's like giving it a shot of adrenaline in essence.
Well, it was even before Trump, so it was
okay.
Since at least 2010, and they were maintaining it. So you can actually look at the Federal Reserve. You go to FRED, which is the Federal Reserve Economic Data. It's run by the St. Louis Fed. They're the ones who actually put this together. You can actually look at this. But the point is, they were running QE for a long time. Then in 2018, okay, but 2 years after Trump got elected, actually maybe a little bit before 2017, they start unloading their asset sheet. And they start trying to raise rates. Remember, there was a time where Jerome Powell, who's the Federal Reserve chairman, was saying like, "Oh, we got to get back to 2%." Okay, because the interest rates are like 1.7, they're sub 2. Why did they want to do this? Well, there's nothing in the economy really telling them to really do one thing or the other. But according to the Federal Reserve's own thought process, what they're saying is we need around 400 basis points or 4 percentage points to play around to get out of a recession. Because on average, they say, historically speaking, it takes around a cut of 4%. Total, right? They want this much possible room to move. And they said, well, we want to actually lower our balance sheet in case we have to do more open market operations in the future. That's in case they have to go buy more mortgages. But by trying to give themselves more ammunition to stave off a possible economic downturn, they are literally contributing to creating the new economic downturn. Okay. So the way this is signaled in the markets is that you had a 10-year, 2-year yield inversion in those, the 10-year, 2-year bonds, their yields were inverted. So generally speaking, if you're going to lock up your money in a bond for a long period of time, like a 10-year bond, you would expect to make more in interest than in a 2-year.
Yeah.
But that actually inverted for a little bit a year ago, right? And that's when all the economists are saying, "Holy shit!" Because that's happened before 6 times in the last 6 recessions, right? So this generally prefigures it. Doesn't mean that it's going to happen, but it's just historically speaking, looking at that data, that's generally been a bad sign. So in some sense, we could say it's a little bit of government mismanagement, but like you said before, the real issue all along is we never really addressed the core fundamentals. We never really addressed like employment issues in the United States, low wage work, healthcare issues, the cost of living, the cost of houses. If you look at the consumer price index, core CPI, it's like 1.7%. That's why if you ever hear Trump say, "Oh, the inflation's never been lower and unemployment's never been lower," like it depends on how you count it, right? They're using
it's how you measure it.
It's the most massaged employment statistic. If you actually look at the people not in labor force, you might get a more severe number, closer to 10%.
Oh yeah, and it's all temporary work as well. I mean, the actual contract work with health benefits, stuff like that, that stuff is just plummeting in very verifiable free fall. And at the same time, we've got like the app economy now. We've got more jobs than ever before because they're all temporary contract work and or like online work.
Exactly. So those fundamentals have not changed. It costs more and more to go to school, costs more and more to get medical services, costs more and more to get housing, whether you're renting or buying. So those stresses have not been alleviated from the American people, and that's why it's so hard for, say, like millennials to get started. It's impossible to start families. It's impossible almost to get housing, depending on where you're living. This kind of stuff is ultimately the drag in the economy they've never addressed.
Mm-hmm.
They've contented themselves with doing monetary policy, which means just helping banks.
But doesn't that have a lot to do with people not cleaning up the rooms or picking themselves up from their bootstraps?
Yeah.
Hey you, yes, you. Do you like cozy environments with other wholesome people? Well then come join the Discord. It's got a whole bunch of stuff to help you with creative endeavors, such as stock footage, royalty-free music, and an amazing community of people looking to help each other out and uplift your content. Join the Discord now by going to weareserfs.com. That's weareserfs.com.
We would like to thank Miranda Marone. You are our monarch, and we thank you for our indentured servitude. We would like to thank our lords, Ricky Pilgrim, I'm Raft, Michaela Schmid, Tomospin, Farrer Tahone. You are all the pillars of our organization. To our Knights of the Square Table, Paul Parafit, Daniel Kahn, Clement Chutskoth, Alan R., Josh Mickelson, and Dr. Zayas, Dr. Zayas, Cooper Pilot, Andrea Lynn Epperly, Dylan Bythe, Terry, Todd Buckingham, and Todd Lajeunesse. And to our merchants, thank you for taking mercy upon us.